So expensive right now, and I don't understand how people aren't talking about it. We don't make enough money. Collectively, we do not make enough money. The price of things are not keeping up with how much we're getting paid. And it's infuriating to me for people to say that people just need to work harder, people need to get different specialized degrees, people need to start their own businesses. That's not the answer. The answer is that billionaires are hoarding wealth. And this system is set up to fail. And I'm just infuriated by it. I can't get ahead. Every month I try to get ahead and I can't get ahead. And I don't know how to cope with that. I don't know how to cope with that. Everything is so expensive, especially in the last 6 months. I can barely get by. So I don't know how I'm supposed to retain hope. Am I supposed to get a doctorate so that I can afford a studio apartment? Is that where we're getting to at this point? I don't know what the answer is.
I'll go over the answer at the end of this video, and we'll talk about some potential solutions on how to get out of debt and not be living paycheck to paycheck. But today's video is on all of the millions and millions of Americans that are living paycheck to paycheck right now. And today we're going to go over the exact stats where we stand today on exactly how many people are living paycheck to paycheck. And I'm going to show you guys who it's adversely affecting. There are some categories of people that are over 70% of them living paycheck to paycheck, as well as going into a deep analysis on exactly how much the cost of living has gone up since lockdowns in 2019. So today's going to be a full report full of boots on the ground testimony of Americans that can no longer afford to live as Americans. In 2025, 62% of Americans reporting living paycheck to paycheck. Now, the interesting thing is now we know that data is being used as propaganda, so not all the companies are reporting 62% of Americans. In fact, some of them are reporting more, but let's talk about the leading data providers and what they're saying. LendEdu's 2025 personal finance survey found that 53% of Americans reporting living paycheck to paycheck. MarketWatch Guides conducted a survey in 2025 revealing that 57% of Americans consider themselves living paycheck to paycheck. Ramsey Solutions reported that 52% of Americans are living paycheck to paycheck as of Q2 of 2025. Bank of America's internal data from the third quarter of 2024 showed that nearly half of Americans at least somewhat agree with the statement, I am living paycheck to paycheck. Now, the interesting thing, when we look at demographics affected, certain demographic groups are more likely to be living paycheck to paycheck. This is crazy, guys. Generation Z, which are people aged from 18 to 27, 73% of Gen Z workers are living paycheck to paycheck, according to the survey. The MarketWatch Guide survey similarly found that 72% of Generation Zs and 65% of millennials report living this way. Absolutely brutal. And it goes on. Women, all women, 61% of women reported living paycheck to paycheck compared to 54% of men in the MarketWatch Guide survey. Now listen to this, guys. If you have children, parents, 64% of individuals in the household reported living paycheck to paycheck compared to 54% of those without children. Rising childcare costs with a median annual expense for infant care of $19,000 for one single infant.
Okay, this is a crash out post. I'm currently crashing out. Sorry in advance. Women, do not get married and have kids unless you plan on and are capable of becoming a single mom. Because 9 times out of 10, 8 times out of 10, I don't know, statistically high, that's probably what's going to happen to you. Now, I love being a mom. I really do. And in fact, I quite enjoy most of the time being a single mom. This is not fair. The world is not set up for single moms. You will struggle. I don't care what job you have. I don't care how much you get paid. Especially in this economy right now, okay? The world is not set up for single mothers. It will be hard. It will test you in ways that you didn't know that you could even be tested. You will have to fight for those kids, most likely. You will have to fight for those kids. You will have to wake up every morning Petition, just real talk, if motherhood is really something that you want anymore, because these men make it so hard. Oh, they make it so hard to be a mom. They take away all of the tender moments of motherhood that you could have had, but you were stuck in survival mode. So you didn't even really get to enjoy it. You're just surviving, trying to raise these kids, trying to do the best you can.
She's really not talking about is what happened, right? Federal Reserve, Central Appraisal District, all of these things impacted the cost of living. Most people, and I believe she's one, don't know how to articulate what's happening to them or really where it came from. So they're lashing out at people, looking for people to hold on to so that they can blame someone so that they temporarily feel good about how expensive their life is. It's a horrible trend that continues to go on. But when we go under the math and we look at what are some of the factors contributing to this financial strain, the first one is obviously rising costs. The prices for essentials like food and rent significantly increased between 2020 and 2024, with food rising by 25%. And I'm going to go into details, more exact details on rising costs here in a minute. But another major thing that Mitch and I are always talking about is stagnant wages. While job markets have recovered, okay, income growth has not kept pace with rising costs. And there is the problem. The federal minimum wage has remained $7.25 since 2009. What about all the CEO bonuses from the Operation Twist, where they gave them billions of dollars in our tax money? Why wasn't that taken care of then? Why did the C-suite get billions and billions of our money? Think about what I'm saying, which is often insignificant to cover basic cost of living expenses. Another reason, low savings. The Federal Reserve found that 37% of Americans could not even cover a $400 emergency expense. That's absolutely tragic. Another thing, and this is what we've been talking about as well, debt. We are in a massive fraud and debt bubble right now. Many individuals are relying on credit cards, overdrafts, or payday loans, as well as buy now, pay later loans to bridge financial gaps. Payday loans can have annual percentage rates exceeding 400%. 400% to get into debt and to get a rush on your income. That's what a payday loan is. Listen to this video of this young woman that's paying over $2,000 per month on her credit cards. And I want you guys to watch her, see how she's reacting to it, because the bottom line here is she's already bankrupt. She just doesn't know it. And I do not want you guys to get in the same situation as her, where she's essentially getting into more debt to service the minimum payments of her current debt, just like the Federal Reserve and the Central Appraisal Districts. Listen to this.
I'm $89,000 in credit card debt, and I'm here to break down my cards to tell you how much I have on each card and what my payment is each month on each card. I'm going to start with the smallest card and work my way up to the highest card. I do have 11 credit cards, so we're going to be here for a minute. The longer that you watch, the higher my payment is. So do your girl a favor and watch to the end. My first card is our Carter's credit card. It has $199 on it. My monthly payment is $30. My second card, Old Navy. It has $362 on it and a monthly payment of $30. Third card is our City card. It has $1,742 on it and the monthly payment is $85. Fourth is Shields. It has $3,057 on it and our monthly payment is $95. Next up is our Discover card. That has $4,969 on it, and our payment is $135 a month. Next up is Chase. That has $5,615 on it, and our payment is $153 a month. Next up is my personal Military Star card. That has $7,860 on it. The payment is $170 a month. Next up is my husband's Military Star card that has $8,095 on it, and the payment is $175. These are the fun ones. Next up is our Visa Platinum. That has $11,503 on it, and our monthly payment is $285. Our Visa Cash Rewards card, that has a total of $20,371 on it, and our monthly payment is $520. Last but not least is our American Express that has $25,371 on it, and our payment is $620 a month. The total on these cards, a little bit more than I said on a previous video because they have been hit with some interest since then. So our total is $89,203. And that brings our total monthly payments up to $2,298.
What I'm about to tell you is extremely important when it comes to credit card debt. If all you're doing is making minimum payments, then all you're doing is keeping yourself enslaved by that debt. And you're also keeping the banks and credit card companies rich, because you guys have to understand minimum payments get you absolutely nowhere. So you have to pay the actual principal down. And generally, the way you do that is you start with the smallest and lowest credit card first. You pay that off and you don't charge again. You must, before you get out of any situation, the number one most important thing to do is, other than a plan and your goals, is making sure the bad stuff stops happening. And what I mean by bad stuff is like collections and continuing to charge your credit cards. Do not do that. It could take you over 30 to 40 years to pay off a credit card if all you're doing is making minimum payments. If you go to Old Navy and they say, hey, 15% off your purchase, guess what? With the annual percentage rate and fees, that purchase just doubled. So if it's a $100 purchase, after fees, it's really $200. So the 15% discount that they're manipulating you and saying that you should take advantage of is not real. Think about that, guys. When we look at the time period of 2019 to current, because that's when the kind of everything went extremely crazy. And also, guys, remember this, I'm going to dig deeper, but a lot of the data is not accurate. It's being used to manipulate us, and it's super sad. But regardless, the cost of living in the United States has seen a cumulative price increase of 23.45% since 2019. I don't think so. Let's read and see where those increases have gone. And when we look here, guys, at annual inflation rates, and again, I'm going to dig deeper, because when I was going over this, I'm like, there's no way it only went up that much. But according to official data in 2019, the annual rate of inflation year over year was 2.3%. In 2020, year over year is 1.4%. And then it blows up in 2021, going to year over year 7%. And look at 2022, the average inflation rate was 8%. The year over year inflation was 6.5%. This period saw some of the biggest inflation levels since 1981, reaching 9.1%. So 2022 was one of the worst inflation years. In 2023, the average inflation rate was 4.1%, but year over year it was 3.4%. In 2024, it was 2.4%. And in 2025, it's saying that it's around 2.3%. When we look at medical care, for example, because I was like, there's no way it went up only 15%. I mean, I can barely afford to, in fact, I can't even afford to keep my medical insurance anymore. Medical care spending in the US has significantly increased since 2019, with total national health expenditures rising from $3,762.1 billion to $4,866.5 billion in 2023. So just that time period, not counting 2024 and right now, that represents 29.3% increase. A nominal increase. So how could the official data say that medical care expenses have gone up about 15% in 6 years when it's gone up 29% in just 4 years? Another huge one, you guys. I mean, daycare, holy smokes. I mean, why do we even go to work anymore? It costs us $1,000 to $2,000 a month to send our children to some stranger that's not properly educating them. The average household childcare costs have increased 32% since 2019.
Our daycare for one child costs more than our mortgage. One child. And we have 2 kids. Someone please explain to me how childcare costs more than housing. You work so that you can afford childcare, and then you need childcare because you work. Make it make sense. Not only that, but you pay if your child is sick, you pay if you're on vacation, you pay if it's closed for a holiday. Not to mention, when they start elementary school, it ends at like 3 o'clock. So what are we supposed to do between the hours of 3 and 5? We're going to constantly be paying for some form of childcare during our child's whole elementary school existence. I see you mamas out there paying the daycare bill every week, and I am with you.
One more video and then we'll talk about solutions.
Okay, what is everybody doing to save money? And I'm not talking about don't get your nails done or make coffee at home. I already do those things. I make 90% of our meals from scratch. I shop at Aldi. I can't remember the last time I bought something fun just for myself. And it's still not enough. So I need to know your hacks. I'm about to just cancel all my streaming services and read books from the library this summer. I don't know. But I need to know what we're all doing.
That's easy. We're all going broke due to the hidden inflation tax, which is wealth transferring our balance sheets to the upper 1% in our society. So we're all going broke, essentially, is what we're all doing. Some of us are maintaining their purchasing power a little better than others. I hope to be that person, but I've been struggling myself just to keep my purchasing power because I want to purchase assets for greatly under market value, but they are not. The powers that be are not making that easy. So understand, first of all, it's not going to be easy. You have to make sacrifices and you have to educate yourself on how things work. Now, let's talk about some of those solutions. According to AI, here's the steps that you want to take. Number one, assess your debt load. And you only need to do that as if you're already in debt. So you want to list all your debt so that you see how many credit cards you have, total your payments, because a lot of times it's a huge slap in the face and a huge shocker, enough so that it wakes people up. Now, number two is saying, again, calculate the total minimum payments. If you're going to start attacking your debt and your credit card, you have to stop charging them. You have to stop the bad from happening, and you pay the smallest one and you work your way up. This is also saying adjust your budget. Couldn't agree more with that. Calculate monthly expenses, not credit cards, like rent, auto insurance, car payments, and things of that nature. Number two, compare expenses to income, especially if you're self-employed. Number three, look for savings opportunities. And one thing that I'm doing, this is saying negotiate with your utility services and things like that. But once you have good credit, what I do is instead of using my debit card for all my purchases, I used a credit card like Amazon. Amazon gives you 5% back depending on the card. So I get cash back for my spending. The key is I'm responsible enough to pay my entire credit card off before it bills. So all I do is get the benefit, but I'm never, ever paying charges. Number four, it's saying consider additional income. A lot of people are getting second jobs right now, and second jobs aren't necessarily a bad thing, especially right now when we really, really need it. And there still are second jobs, and it's not the best jobs. Maybe it's Uber Eats and things like that. But if you can make more money, you should probably make more money right now because that's going to help a lot. This is also going into a debt repayment program. So they're also going into a debt snowball method, which prioritizes debt from the smallest balance to the largest. You and I talked about that. Number two, debt avalanche method, which prioritizes debts from the highest interest rate to the lowest. So that's also a good method, but I find that paying the smallest up is a lot more effective and it gives people hope along the way. Although I do understand, like if you can, if it's a close balance, then yeah, pay the credit cards off with the highest interest rates. That's common sense, right? Number three, debt consolidation. Now, this is a tricky one. So, for example, that lady that had $89,000 in credit card debt that was paying about $2,400 a month, if she goes in and do a debt consolidation loan and say gets a $90,000 loan, that payment may only be $1,200. So that may free up $1,300. The key in that is whatever the difference is, don't use that money and spend it, right? Use that money to pay off the debt that you consolidated. Does that make sense? But be very, very careful because there's a lot of gimmicks out there. Usually you just wrap up the loan in another loan. So just make sure you look at all the pros and cons of that. The last one is seeking credit counseling. Nonprofit credit counselors can help. But again, you guys, all you need to do is make a decision right now to do everything in your power to get out of debt, get back on track, and preserve your purchasing power. It starts with a decision. And other than that, guys, I hope you make that decision. If you want to learn how the housing market works or how to end property tax, any of those types of things, don't forget, go to my website, realestatemindset.org. And I have exciting news coming up in the next week or so as we are about to start marching to Austin to push the bill to repeal property taxes through. And if you guys are out there investing in yourselves in real estate or just helping us end property taxes, you guys already know we wish you luck and we hope you win.